My name is Tim Hamrich, and I love doing these webinars in partnership with Fractal. I lost count of how many we've done over the years, but I think what Fractal has to offer fills a very clear need. But it does require some understanding of the tool, how it's used, where it's best appropriate, and how it can help you, strengthen your balance sheet and improve your working capital situation. So having these types of forums where we can not only share real experiences from real farmers, but also that you can ask questions that might be relevant to your situation. I think it's a real critical part of the process of understanding how this can help you and grow your operation. Today is especially cool because I think this is the first time where our panel has been exclusively made up of, other than Ben Gordon with Fractal, made up of farmers, people who actually on that side of the table. So I'm excited for that. I wanted to go ahead and dive right into things here, but you probably want a sense of kind of who you're going to hear from. So I'm just going to read some quick bios from these guys so you understand who we have today. First, we've got Ben Blair. He's the Chief Financial Officer of Maxwell United. He holds the role of integrator in evaluating new business opportunities and implementing policy. Maxwell United is a 30-year row crop and cattle operation based in Maxwell, Iowa, with a number of different supporting agribusinesses across turf, retail, logistics, construction, and compost. Ben, go ahead and wave so we know which one you are. All right. Good deal. Also with us is Rich Bronick, who owns and operates R&R Bronick Grain and Cattle with his wife, Stacy, located in central Montana. Bronick Livestock Operation seeks to ethically produce grain and beef cattle in a sustainable, low-cost system. Their entire operation is built on the foundation that they want to maximize production while building soil and plant health. Rich, if you could give a little. There you go. Wave. All right. And Ryan Drozd is a partner and operator with Drozd Family Grain, family farm that's been a steward in Southwest Michigan for over 40 years. Ryan's father, John Drozd, began row crop farming full time right after high school in 1977. Ryan and his family strive to lead in up to date farming practices, taking them full scale in a large, primarily corn and soybean operation. And Ryan, we'll get a nice wave from you. Perfect. Last but not least, we've got Ben Gordon, the CEO of Fractal Ag, a passive farmland investor partner that helps farmers access the capital they need to grow their operations. Ben previously co-created Corteva AgriScience's carbon program, while also leading business development for that. His background includes agriculture technology, management consulting, private equity due diligence, and he previously served as an infantry officer in the Army. He is very proud to be from North Dakota, although we won't ask him where he lives now, where the original family homestead is still farmed by his extended family. Ben, give a wave as well. And if you came a little bit late, we do have a poll question there. I think we have maybe a few more minutes on that, but we are going to get started here. And Ben, maybe a good place to start is just starting with the concept of fractal. We're going to dive into the weeds about exactly how this looks for these three guys that are joining us on the panel here. But I think for those who might be still getting their arms around the concept of fractal, what exactly is sort of the pain point that you're setting out to solve here?
Yeah, thanks, Tim. I think at its simplest, we wanted to figure out what one of the biggest needs for the family farm was today. And really, if you think about all the different jobs that a farmer has, like it's a lot of hats. They do a great job, but one of the biggest things that's missing, especially if you look at where the market is at right now, is the need for capital. And we have a great banking system, but specifically growth capital, equity capital, without giving up control. And so, really that comes down to, deals are getting larger. We obviously have generational transition. Nothing is getting cheaper. Guys, equipment, a little bit more expensive these days, land a little bit more expensive, all of that. And so if we're going to keep family farms owning their assets and having that control, they need to have a source of equity capital. And this exists in almost any other industry that's out there. And so we're just taking that and bringing it to the farm. And that's really easy to say at a high level. But it's something that is really, really important and can be used in a lot of different ways by these operations.
And you say, getting capital without giving up control. And I think a lot of folks know that, hey, there's been investors' interest in farmland for a long time, but control is something that's always been a concern. What exactly do you mean by that not giving up control part?
Yeah, I mean, we are very blunt about being a passive investor because we think the farmer is the best active manager. And that's not me just saying that because I got, three folks that I happen to know and have done business with like here on the call. Like Rich and I were in New York last week and we literally went out and to talk to a bunch of investors and like literally the whole pitch was, hey folks, in New York, do you think you know what's best? And we had an operation. We had Rich in Montana, we had Illinois and Nebraska, and all of a sudden they realized it's pretty darn complex. And so that passive, it's really just putting the farmer in control there. The other really important thing is just managing risk and having symmetry. So not having to make the trade-offs on which investments you're going to make. So like, are you limited by capital or management capacity? And this isn't just like a growth, get massive like story. It's also just managing that financial risk as part of it too.
And for the farmers that are tuning in today, farmers, ranchers, producers, um, what do you hope they get out of this webinar? I mean, you gave them just a brief explanation of what Fractal is. They know we've got three producers on here. What are you hoping they walk away with today?
Honestly, knowing the ringer that all three of these folks put us through before we do a deal, I just want to expose that and just have a fun conversation because Ben hacked my spreadsheet. Rich had to teach us about pulse crops, and even though my family farms a somewhat similar system, I had no idea what it was like in his neck of the woods. And again, had familiarity with some of Ryan's market, but it's such a unique local market and where that goes, and both understanding how to use us, how they're thinking about their operation over a longer time horizon, and just like the special sauce that they have, and essentially they're arbitraging us. Like they're all going to make more money than we will, and I'm very very happy with that. And like that's kind of the thought process I want folks to be able to come in. It's not really about us; it's how farms can use something like us to grow and meet those goals.
So you're saying these three guys were not 100% on board the first time Fractal spoke with them?
Well, there's no snake oil and like nobody's ever had an investor come and those relationships don't have a lot of high trust. I'm not sarcastic at all ever. Yeah, I mean like these are really, really important decisions. And I
Yeah.
mean, honestly, the type of farmer we want to work with is going to put us through the ringer. And like that's a positive to us.
Awesome. Great. Well, I mean, yeah, let's dive in and hear from some of these guys. Maybe Ben, a good place to start would be with for you, just because you had the unfortunate. I read your bio first, so you're top of my list here. But when did you first hear about Fractal, and when did the dots start to connect that it might be a tool you could use in your toolbox?
Yeah, so we were introduced to the guys at Fractal by somebody we know from the industry, so common contact. But yeah, we started talking maybe 3 years back, I guess. And it was kind of, we thought it was a very interesting model. There's lots of things that you guys have already touched on that we thought was attractive. I mean, one, the control aspect is huge. I mean, especially there's a lot of growers watching this right now. Having someone else come in and tell you how to farm the ground you're operating isn't sustainable. And the fact that the guys at Fractal and their investors, more importantly, understand that you got to have right person, right seat. So maintaining the control aspect was big for us. Also, a lot of it, the Fractal guys, they're also choosing who to work with, right? So I think the relationship side of it was the biggest part for us. Why, obviously, well, Ben said I hacked his spreadsheet and I feel kind of bad about that, but I wanted to understand exactly what was going on in their model. So once I understood the number side and started putting some use cases together on it, but honestly, our first draw or our first toes in the water were more to start developing that relationship. So
And where did you connect the dots with what Fractal is doing? And like, okay, this is actually a problem I've had in the past. Is there any like situation that the pain was still, very raw with you, where you're like, oh, that might actually help next time that situation comes around?
yeah, and I think, our first use case was probably a decent example of that. We were coming off a couple decent years. We had been essentially consolidating some capital just because land was starting to move in our neck of the woods. And we had actually just done a recent land investment and sunk capital into that. And we were looking, kind of where that was going to come from. And we were going to kind of taper back on our tiling schedule. Well, I mean, I started putting numbers together, even with the cost of money of the fractal investment, it allowed me to keep on my roadmap with the tiling and get that return started earlier. So that's probably a good example of it, I guess.
Great. No, I appreciate that. And want to hear from these other two as well. But something I failed to mention for those of you who are in attendance, you have the ability to ask your own questions of each of the panelists here, whether that's about, Fractal or how they're using it or what their experience has been. We want candid conversation here. So these questions I'm asking are not scripted. Obviously, the questions you're asking are not going to be scripted. So let's hear them. There's a Q&A icon on the bottom of your screen. At least that's where it is for me. It's just got like a question mark there. If you just click on that, and you should be able to ask a question, and I'll try to answer as many of them as possible. But one thing we don't do is we don't save the questions to the end. So don't save your questions to the end. If you have a question, put it up there now, and we're going to try to integrate it into the conversation as we go here today. But same question, Ryan, for you. What pain point did you see something like this solving? Obviously, you know what other sources of where you can get capital. Where did you see this really helping?
I mean, in our case, we had some instances that we had gone through for growth transition. A lot of the points that Ben hit on of why he started the company, and so for us, it's kind of like we're kind of hoping to use it retroactively, and so we had a lot of opportunities we had to give up through our transition from my dad previously farmed with my uncle until our my cousins and my brother and I grew up until we had a natural family transition. And during that transition, we missed out on opportunities that we probably could have maintained had we had a tool like this. And so I'd say that's one of the biggest things. And I also want to piggyback off Ben and say that the relationship and building that. I mean, we've kind of beat a dead horse with this tool and analyzing it. And I think the relationship is a big part of that.
And can you talk more about that? Why is that relationship important?
For me, it's kind of like feeling each other out, testing each other out. I mean, I think farmers get kind of scared by the term investor sometimes, just to be frank.
Yeah.
And so for me, that was a big reason is just feeling each other out because, I mean, honestly, if as agriculture gets bigger, it is kind of a scary world. I mean, I'm only in my 20s still, so we got a long ways to go.
Yeah. And Ryan, when you mentioned kind of the opportunities that came along that you could have
Yeah.
maybe used a tool like this, what are you talking about? Just like land acquisition opportunities, or what do you mean by that?
Yeah, all of the above: land acquisition, equipment opportunities, improvement opportunities, all over the board. Things that we could have done to grow our business steadily, and we've been, yeah, I'd say just all of the above.
Very cool. All right, Rich, I want to bring you in here too, and then I want to go dive deeper into all three of these use cases. But Rich, for you initially, when you first started to kind of think through this concept, where did you see a place where it could really solve a problem you've had in the past?
Yeah, I think I was looking more towards the future. We want to grow our business. We want to do some things so that there's opportunities for our next generation and bringing in some more labor and just being able to share in that. So as I looked through the capital needed to expansion, I realized quickly that, you can't go on your own totally. So what I liked about Fractal is they solve a cash flow case because there's an interest component. And so when you're servicing that debt, it's not traditional. And that frees up the cash flow that you can either go get more land up on the front side, or it can be more sustainable through paying for itself on the cash flow side if they're a piece of that.
Cool. And we do have I didn't share the poll results. Let me see if I can share these. I'll click share results. Great. We did get some results of the poll, which would make sense with why you'd be here, right? Very few have the problem with quality deal flow. It sounds like the deals are out there and they are flowing. More people needed access to capital, which makes a ton of sense of why you'd be here with us this morning. Scaling operations with growth, 12%, and then all the above 50%. So it sounds like there is definitely an all of the above thing, and access to capital were the two clear leaders, which I think there could be some help with this. And on this topic of like what's problem Fractal solves, Ben Gordon, I should specify. When do you often see in your conversations with farmers as they, that is the tool I never know I needed?
Yeah, I mean, I think it's really just building on what these three guys said. Like the first piece is the high level pain. So, Ryan, I think did a great job describing like there's more management capacity on that farm than there's capital on all three of these operations. And like they're all very distinct operations, but that is such a common problem. And so like that's the first thing is like changing that way that you're looking to say, I had the playbook from mom and dad or extended family what the operation's been doing. There's a new world in the future, and I need to think about that. And I need to think about like what could I do if I was able to unshackle one constraint in my business, and what are the other things that then get unlocked from that. So that's the first kind of just like mindset shift. The second one is you need to figure out how it pencils. And so all three of these guys, like I think one of my favorite things was, right away, like we're expensive capital relative to debt. That looks different. Like let's say that explicitly, especially in a forum like this where we have a lot of other farmers on there. But we're much cash cheaper and we help manage that risk because if land goes down, we're riding that with you. And so we're essentially, bringing a lot cash cheaper in the near term. And then the farmer gets to then make a bunch of money, not just on that field that we're invested on, but on that next field and across the operation. And the folks that see, how what that's going to unlock for their business, that is just a snowball that keeps rolling and getting bigger and bigger. And again, this isn't something that's really this is kind of new to ag, but this isn't new to a lot of other businesses that are out there.
And Ben, for you, where did you see the opportunity? Knowing what Ben Gordon just said, Ben Blair, where did you see the opportunity to use this capital for your operation in the near term?
In the near term, essentially, like I said, it kind of, we had just deployed capital that we had essentially earmarked for, piling projects. I think, land infrastructure is one of the best returning assets that you can invest in, I guess. But also, when a farm comes up for sale, everybody knows how that goes. You get one shot at it, and it happens fast. So, I guess you could look at the Fractal investment as kind of retroactively funding that land investment, and then us sticking to our original capital deployment plan. But essentially, I mean, if you can just, like Ben Gordon said, the Fractal capital is expensive. But if I look at that over time on how long it would take me to recoup this, to tile this 400 acres with cash, paying that extra couple percent up front, but having that essentially IRR or essentially, the contribution margin that comes from that investment, it far outstrips the cost of that capital, I guess.
So you use some Fractal capital to tile some ground and penciled out kind of what the return would be on that over the long term, kind of by getting this up front. Is that right?
Yep. And so, I kind of broke that all down and just kind of did a 10-year roadmap on how that looks and the return back to us as an operation. And then, back to that relationship, I took it back to Ben and Brian and Harrison, Emma, all those guys, and they looked at it too, and they're like, yeah, that makes sense. And so kind of move forward from there. So, because
I guarantee. I'm sorry.
They want to know that they have, us as a borrower or as a grower have a plan for that capital. They want to see us succeed. That way their investors succeed and they do as a company. So,
yeah. Go ahead, Ryan. You're going to say something?
Yeah, I apologize for interrupting, but I was just going to say that I guarantee you that there's farmers listening on this Zoom call as we speak that have band-aided some investments they've wanted to do with their operating line, and I guarantee you that using a tool like Fractal over the long run is going to be a lot cheaper than paying down your operating line. We're guilty of that too. I mean, part of going back to fix some old mistakes with this tool is to kind of relieve some of the stress that our operating line over the years has taken to do some of the things we've wanted to do.
Yeah, can you talk more about that?
Yeah, so I mean, over the years we've had less access to capital, just kind of like the overall theme of this. So, every once in a while, a smaller opportunity would come up that we'd say, yeah, we really want to do that. So we'd use our operating line temporarily to achieve that. Well, over time, I mean, when that grows throughout the year and your interest grows, as it turns out, it probably would have been a lot cheaper to have a less intensive tool like Fractal to pay for those investments.
Yeah, absolutely. Well, Rich, how about you? How has this worked for you?
Yeah, I mean, piggybacking on that, you can use long-term equity and immediately you move cash into current assets. So now you have this flexibility to either move fast on a land deal, which is very important in this day and age, because maybe if you can say, yes, I can get you a check tomorrow on down money, that deal's done, instead of it going to four other neighbors or to some other opportunity.
And can you share kind of your experiences so far with Fractal of how exactly that's worked in your operation?
Yeah, full disclosure, we're still sitting on Fractal's capital and haven't deployed it yet. But back to that use case, I'm ready to make that deal. I came into it obviously being from Montana. They were, but that's one of the things they were willing to learn the market, understand where they could participate in it, and I really appreciated that from them.
And why was it good for you to take the capital, not having a plan for it yet?
I just back to that. I'm ready to make a deal, so when that opportunity comes, I don't have to go to the bank or where am I going to come up with this down money? It's ready to go.
Mm-hmm.
I won't speak for Rich, but I'd say a couple of our folks who've looked at something like this, it's really no different from how other companies do it when they put a little extra cash in their balance sheet going ahead of a downturn. A lot of folks using swap accounts, like especially with where interest rates are at, you do the spread compared to where Fractal's at, like the option value that you get versus the cash cost. And in some cases, like we've had folks who have actually been able to make a little extra money on just even the treasury management side relative to where they're at, especially if they have a ton of soil health practices and get those discounts. Like, frankly, all three of these folks have.
Okay, well, so talk more about that. If somebody's hearing about what do you mean discounts? What are you talking about?
Yeah, I mean, for us, I guess it's we really think that soil health and yields and really just good agronomy is how we frame it. I think too, there's a lot of buzz around regen ag, whatever. Like for us, it comes down to like, can you grow a good crop that is going to be resilient over time? There are many practices that work generally, but need to be implemented locally and specifically. So we have a list of those practices and those practices. So think about things like no or reduced tillage, cover crops, in-season nitrogen usage, just as a set of examples. There's more than that. Those have costs, and so we should share in those. And so, if you're doing those practices, you get a discount on that annual payment because we believe that we're going to see greater cash flows down the road, and that's going to hit asset appreciation. So it's not given, it's not pushing anyone to do like that control piece really matters that Ben started off with. But it's also that symmetry of if there's a cost and there's a darn good active manager in that farmer that wants to go implement that practice that we're going to see a benefit from, we should help to align with the farmer on kind of the financials as well.
Yeah. And Ben Gordon, we did have a question in the audience here. And without asking all of our farmer panelists to reveal all their personal information, maybe you could kind of answer it from a high level here. It's from Bird. It says, can you get each farmer to talk about their typical deal structure and size, acres, money, ownership, and what was the sweet spot for what they're doing, and what is the cost of the Fractal investment to them? I think this is the question at the heart of this whole panel. So without making them tell us all their personal details, let's give a realistic answer for what that looks like.
Yeah, so we'll typically do investments $250,000 to a couple of $1 million, and that's as we have more investors that kind of come on there. That maximum will continue to increase. This can be one single deal or one single field or multiple fields, and a lot of those details are going to depend. So not specific to these guys, but their general markets. Land where Rich is at in Montana is going to be Rich. What's our range here? I mean, we're talking 3,000 to 5,500, roughly.
Per acre?
Yeah.
Yeah, or half that.
Yeah, well, yeah, especially we're talking like on the edge and pasture land or like where that goes. If you're talking central Iowa, you could be anywhere from 9,000 to 20,000. With more stuff kind of in that, kind of 12 to 14 range. Ryan, you have a ton of variability because you have really high quality ground and you have low quality ground. So that range is even wider probably than, maybe the top end isn't as high, but similar to Ben, right?
Yeah, we probably fall somewhere in the middle overall.
Yep. And so the amount of acres it's going to take, like it's really about the dollars and the fit of the deal. And so what we've done is we've standardized kind of the offering and the contract. So these guys don't have to renegotiate every time themselves, and they can talk to each other to figure out like, where does this fit? And there's just that standardization and transparency that's really, really important in that. So, we go in, we take a position on the field. That gives us essentially our share. That share stays consistent as long as everything goes as planned, and where that goes. And then at year 10, either it's a buyout or hopefully we've earned the right for renewal there, and can go another 10 years. That annual payment is set as a percentage of value. That payment moves up and down with those practices. And so, if one of these guys, wants to get capital, like that deal is set, and then they can kind of top up. And I think part of our thesis here is that, and back to what all three of these guys have said about relationships, is that, it's not just one deal. Like, we're not in this for just one thing. Like, we plan to deploy capital with high quality farms. And as we know them more, like we know their operation better. And like, we're able to be a little bit more thoughtful even about structuring and like what the next products will be and how that fits, and just kind of grow that book with them, because a high quality farm is going to need more capital, not just next year, but the year after and the year after. And we want to be positioned for that relationship for them to succeed.
And Ryan, I'll let you start off this next one. If a farmer's out there in the audience, and like, okay, well, you guys said that it's a higher cost of capital. So, like, what's so great about it if it's a higher cost of capital? What's it unlocking for you that just wouldn't be possible without it? What would you tell that person, Ryan? This hypothetical person I just made up in my head.
For starters, I mean, I think we've touched on a little bit, but just the quickness and ease of the money is probably the first place to start. Deals are relatively quick. They're relatively not as, I mean, a bank's a little bit more wants their nose in your business, and Fractal, not so much, as he's kind of alluded to. So I think that's the first place to start. And then ultimately, the end game for us, I mean, is to build this into a bigger deal, a bigger relationship, just kind of like Ben just touched on. So, and for us, I mean, the cost isn't that bad. If you look over if you take it to the full 10-year term, it's actually, you can make an argument it's lower than the current interest rates that are being offered out there. So,
and I guess that just hinges on kind of what land appreciation does in the interim. Yeah. Rich and Ben Blair, what would you tell that same hypothetical farmer? Anything you'd add to Ryan?
Yeah, I think, if you look at it independently, it may be a higher cost of money. But I also look at it as maybe that money I can go up to 1.5 times my acres out the front, with the same down money, same cash flow, debt service. Now I have access to 150% of the acres I would have with traditional financing. Depending on your fixed cost structure, now I can actually lower my cost in the operation and move on more acres.
Rich, were you a recovered CPA by chance?
Maybe.
All right. So for us non-CPAs, Rich, can you elaborate on that a little bit?
Oh, right. So, let's say we use Fractal money as a percentage of that land acquisition. Now I can use that same money, but there's an interest only component. So it's just, there's less cash out the door, because traditional financing, you're also paying off the equity side of that. Yep. And as you look out into the future, they also share valuation. So if you think land's high today, and that's kind of a risk hedge, that component, that, if land drops in the end of that 10-year period, they're going to share in that loss.
Yeah.
And you're going to hit that gain right with us too, right? If it goes up. And so it's that symmetry.
That's right. So I like it that I want to use that capital for land in our case, because we don't do a tile or we don't have an immediate return. So that by deploying their money into land, I'm sharing with their upside and downside.
And Ben Blair, anything to add on that?
No, Rich hit it really well. I don't have a ton to add, but I think it's important to highlight kind of what Ben and Rich just said too, is it is nice knowing that, your investment partner is sharing in the upside and the downside. And when we get to participate in that upside, like Rich said, it's upside on acres, it's contribution margin that you wouldn't have seen because you wouldn't have had access to that extra 50%. without this investment tool. So I think that's important to hammer home.
Yeah.
Yeah,
And Ben Blair, go ahead, Ryan.
I was just going to say, Rich said exactly one of my notes I have written down, that Fractal kind of has some of the skin in the game, and that they would share some of that downside risk with you at the end if that's how it turned out, and that's helped us get on board.
Yeah. And we had a question from the audience about how many deals each of you have done. I think I know the answer to this, but for the sake of the audience, would you mind just sharing kind of what you've done, what activity you've had with Fractal so far?
Yeah, I've got we did one early one just to kind of get a relationship started, and then quickly we're able to do another one. So two.
For us, I mean, I guess kind of same as Rich, we did kind of our initial draw with them. And that was more to build a relationship, make sure we were in kind of on the front end of what I think is a very good model and one that's going to grow. So to solidify that relationship, and then we're working on getting some more fields in the pipeline right now. And, you know, back to the kind of having some dry powder there for when things start shaking loose, which I do feel like it's getting close, at least in our neck of the woods. So
Yeah, we're at the end stages of closing our first deal as well, and we have other fields in the queue, kind of like primed up, ready for when we're comfortable to do more.
Great. And Ben Blair, you know, I like your example of like using this for drainage tile. I think a lot of people think of Fractal and they think, okay, it's a way that I can acquire more land, but there are other assets as well. And I'm curious how, and maybe Ben Gordon, this is a good question for you to weigh in too. How are people using this potential financing opportunity creatively like that, or is it mostly for land acquisition?
I mean, I think the rule of thumb that I think all four of us use is like it needs to return at or better than land. Otherwise, it doesn't make sense. This thing is not a silver bullet, and like this shouldn't, like there are many cases that this doesn't work. Like if you are not planning on farming, you know, 10, 15, 20 years in the future, like this is growth capital that exists. And growth doesn't just mean acres. It's, you know, growing your business in other ways, growing your margin. That's where it's great. If you're going to go buy a boat, if it's distressed and you're just trying to like hang on, there are better sources. Like you're not going to get through our underwriting process, frankly. But there are better sources that are out there for that as well.
yeah, I don't have a ton to add to that. I think he nailed it, but it's just having a plan for that capital is the biggest thing, and make sure, I don't know, you're doing your fiduciary responsibility, I guess. So
Ben, when you say you have a plan, I mean, like, I think there's a difference between how you guys talk about it. I mean, like, your plan is what, a couple years down the road in terms of capital planning?
yeah, probably. And then case by case, you know, each use case gets broken down. I mean, for you guys, you know, I'm looking at 10-year periods where, you know, that could vary, but yeah, I don't know. I'm a big spreadsheet nerd, so I need to see numbers, I guess. And so as long as I can work my way through that and it makes sense for us, then, you know, I've got the confidence level to move forward. So
Yeah, I think that's an important point there, which is all of you have mentioned the importance of building the relationship for the future, and none of you have said I had an urgent deal that I absolutely need to get done. And good thing I found Fractal because overnight, you know, I got it done. All of you are thinking about 2, 5, 10 years down the road, and so I wonder, you know, if you could maybe talk about once you decided to say, okay, I want to start this relationship, what does a process look like from a farmer's perspective? Because I think maybe that there's a misnomer out there that you wait until you absolutely need it and then you try to form that relationship in a hurry, and that's not really how relationships work, is it? You know, Rich, if you want to start on that one as far as the preparedness aspect of this and what that looks like from a farmer point of view.
Right, and I think our use case was maybe unique in that it was a new market for them, but it did take some time, and it's going to, you know, there's a financial component where you're going to show them financials that were a good investment, and you know, get to know our operation, what are our goals, and then we're going to look field and what are the practices on that field, what's the yield history of that field, and then they're going to come back with a valuation based on those yields, the soil, and what amazed me is how well the valuation came back to what I expected it to be in the local market, even though they had little experience in the Montana crop market.
Ryan, what about you?
Yeah, exactly the same. Their evaluations impressed me in terms of, I mean, you always get kind of weary of traditional appraisal, and these guys factored it. They were very thorough, and so the process of the evaluations was very impressive. And then for me, in terms of like advice on the process, take your time with it. Don't rush into it, and that's why I think it is important to, even if you're like still like on the fence about it, like maybe get involved with the process anyways. Because for me, it got me kind of out of my comfort zone to kind of think really deeply about the growth and future of our operation. Because like I said earlier, I mean, I'm in my 20s. I got a lot of time left to do this, and agriculture is changing in a really big way. So we just want to be prepared for anything.
Well put.
Yeah, and I'll I guess kind of reiterate a couple points from my point of view too. Overall process wasn't anything unexpected, I guess. Honestly, I was impressed with the onboarding process. Couple things that these guys have already touched on, but for us, we obviously see value in a lot of the regenerative type practices that we employ, just trying to essentially build out the productivity of kind of maybe that middle ground, right? And so in this use case specifically, I did pick a field that if you were just to go evaluate it based on CSR2, I know what that dollar value would have been. But I was really impressed with the evaluation process because they come back and they show we're outperforming other pieces of dirt that would be kind of in that same CSR class range, which is due to our practices, but they valued that. I thought that was big. And also, since we feel like we see return from these regenerative practices over time and land value, we're doing them anyway, but it's nice to see a company, obviously we've talked a little bit about reducing that cost of money based on those practices, but the fact that they put value in that, and to me, it's kind of like a retroactive, like, you're pulling more equity out of that, I guess. So,
yeah.
And just to be clear, like we're selfishly doing this, right? Like
Yep.
that is driving yields, that drives cash flows, and like we love that. And it's like that's the win-win piece that I think is super important. Like none of this is charity. Like our investors need to go get a darn good return. And so like all of that process and like like we can probably even spice this up a little bit or like where it struggles. Like we ask for data that a normal investor doesn't. Like we ask for your yield data. We need to understand your financials. And like our crew is going to work with the farm to learn that market and like learn that operation. But if it's not the performance isn't there on yields or whatnot, like it's probably not going to be the best experience out there. Now we want to be transparent, and so that way you can kind of pick and choose your fields so that you're kind of picking the best fit for us. But it's that transparency is often a little bit of an unlock for folks, for them to realize like it's not going to be that like hold your cards tight. Like we're not going to be a good partner if that's the case. Just to be frank, like you're not going to get the best experience from us because we're going to be pestering you, asking for that data and whatnot. And hopefully it's not a lot, but it's the important stuff.
Right. Well, and all of these guys talked about kind of they wanted to get started and form the relationship. To start this process, do you have to agree to take on an investment? Go ahead, Ben.
Yeah, no, it's not like it's starting the relationship. Two, it's trying to identify if the deal makes sense and where does it go. And so like if especially if it's a new market, a new relationship, it's going to take time. And so being ready for those deals, like you guys have all mentioned, is really important to us. We can move pretty quickly, but we move quickly once we have the relationship and we know the market, right? And so like that's a really important thing. So like for us, it's about kind of loading up, and I think every one of you guys like has more fields and more capital ready to go to pull that trigger. And so we essentially have this concept of like pre-approval, and it's almost like being pre-qualified. And so by being up ahead of it, you are able to have an advantage. I know like Christian Hebert and Evan Shout, who we were all talking about before we get in, they talk about with your banker, with a partner like Fractal, and just knowing what your operation can handle. It's about that proactive planning, and it's way more than just us. But like it is, if you're going to work with us, you need to get ahead of it to make sure that when those really big opportunities hit, you can actually pull that trigger in a way that you actually have managed the risk and feel darn good about.
Right. So what's the turnaround look like if there isn't a relationship, and then if there is a relationship, if a deal does come along?
I mean, like we could probably turn around a deal in 2, 3 weeks in terms of evaluation, maybe an extra week for closing with these three folks because we know their markets. We've underwritten the farm, so we know we know farm and operator performance. We know the financial performance. Like we already know the local title company, all that stuff. Like that moves a lot faster and a lot simpler. But that's based off of work that in some cases, we've probably got Ryan, the first deal or the first field we looked at, that was, a couple of weeks to get evaluation. Rich, it took us what, 2 months because we had to learn a whole new market on where that fit. And even, Iowa was a little bit easier because we knew that market, but, we had to learn a lot about, even Maxwell's because, it's a diversified operation. So yeah, simple answer is it's going to be a couple of months, and we all know like deals don't wait around for that, which is why we like folks to get moving ahead of time. And we think it's important for them. Like Ryan said, like this is a new way of looking at your business, and we want folks to be able to like think about it, and we'll be part of it as much part of that discussion as you want, or we sit back and are when you're ready for it.
Great. Well, we do have another. Does somebody want to weigh in? Nope. Okay. Sorry. I thought I heard something, just the voice in my head. We had another question from the audience here. And by the way, if you're sitting on a question, your window is rapidly closing. So please make sure you use that Q&A icon to ask a question of the panelists so we can get your question in before we close out. But this question is, how can our operation use Fractal to unlock equity in our existing farmland to help finance the acquisition of our next farm while maintaining operational control? That is a glad you asked type of question, right? Right, Ben Gordon?
Yeah, kind of teed up for him.
Hey, Ryan, you want to take it?
No, you're good. You got it.
No, like that's essentially what the model is built around. You have excess equity. There might be debt on it today. Hopefully that debt you locked in, 3-4 years ago, and it's a nice 25-year note at about 4% interest. We want you to keep that. You've probably seen a little bit of appreciation, and you want to expand. If you were to go back to the bank, you might have to lose that really great loan, or there might be extra things. So combination of like what you're going to do. You're going to go through the valuation process these guys just talked about to look at it. Like Rich said, you should probably be thinking about your cash flows and thinking about what the constraint is. And so if you're really trying to look at the next farm and potentially look at working capital balances going into the commodity or in the commodity cycle, not going into that we're at right now, you might want to use a little bit more Fractal than debt right now at this spot, especially if you're worried about kind of land going up and down and where that fits. And then, from that process and you thinking about where this fits in your operation, we're going to do a valuation presentation. We're going to show our work. You guys know your yields and you know your market, but the reason that we do that with every farm we do, and I personally do that, is we sometimes miss stuff. And if we can mutually prove that the value should be higher, then like we'll go back and we'll go through, but like we're not going to negotiate and horse trade and where that goes. We'll align on evaluation, and from there, it's cash flows. There's an annual reporting. Yes, there's those management practices that we really believe in and I think are incredibly important, but beyond that, we're not going to tell you how to farm and where that fits. And then, like we talked about before, hopefully at year 10, we've earned the right to, kind of turn this around, or you're ready to refinance us out. Guys, what did I miss?
No, and then I think maybe you could speak to the end of the 10 years of what that looks like on the valuation.
Oh yeah, great point. Independent third-party appraisal, so that way Fractal can't game it, you can't game it. We know appraisals aren't perfect, so like let's say something comes in that's pretty off. Either party can order that second appraisal. You're gonna take the average on it. It's really, really important, and contracts are really, really important in these things. Hopefully, guys, like we've earned the trust to all work together, and we've all talked about relationships, but I'll use a really terrible scenario, like somebody gets hit by a bus or decides they don't want to be somewhere. Like you need to have the paper to back up, these sorts of deals, because these are operations that have a lot of family legacy in them. So that paper needs to match the values.
Well, guys, for Ben Blair and Rich and Ryan here, what were your biggest concerns or going into this, and sort of talk about what questions you've had or maybe still have about how all this is going to play out. I'm curious from your perspective, if you were in the audience right now, what would you be asking you? And I'm going to guess by looking at faces, Rich is most ready with something top of mind. Go ahead, Rich.
Yeah, I think the biggest question was, if the valuation, if they wanted to come in at a discount to true value, yet, participate in all the participation, then that was a deal that I felt like wasn't going to be a good fit. But they came in at a very good valuation. And then, you understand that there is upside. So that's where the cost comes in, because they're going to share in that upside. But also, if I've used their capital properly, that I have the upside, or our operation has the upside to share in that. And then we can manage that cash flow demand down the road if we want to buy them out, that we can be prepared for that, because that has a time horizon. Or if we want to go again with that same situation for the next 10 years, we have that flexibility. And also, you can be flexible to buy out early if you so choose, and that's written into the contract.
Yeah, and I'll just kind of echo what Rich said then, or just then. And all three of us do specifically kind of praised the appraisal process of it. And that was the biggest thing too, because like Rich, I think that's one of the things I was watching close. That's why I picked the farm I did, just to see, if that valuation was going to be realistic. And it came in exactly where I thought it should be. And to kind of answer, looks like Andy had a question asking about the importance of historical yield data and stuff. Obviously, that's kind of what we're saying. A lot of that evaluation is driven off your individual performance instead of just getting siloed in with everybody else that's a 79 CSR2. You know what I mean? So that part really is important. I think the technology and the way that process works was really impressive. As far as, looking at comparative fields within our county and kind of that distribution chart that they show. And Ben had to laugh because the owner of our company, we were going through that and we were, not trying to be humble, but not humble, right? We were sitting higher than kind of the derivatives in our area, but there was one dot that was higher than ours. And I think John's still trying to track that guy down. So, but yeah, no, it was good.
Yeah, I'm laughing at you guys because you're all saying like you like the valuation process, and in the valuation presentation, you all seem to be wanting an extra, 250, 500 an acre. But no, I guess not just joking on that. Like Ryan, we had a good example. Like you intentionally put a field that didn't fit our process, and our valuation was way lower than I think what that field probably would have sold for, because it just didn't. You're working on it agronomically, and you were kind of testing us a little bit, and like. I think you guys controlled that process. And maybe one thing I'd say anyone who wants to work with us is like you want to cherry pick a little bit. We're going to tell you what we're optimizing for. Then you're going to pick a field where you're going to get the best valuation. And that is very transparent all the way to the investor, because we say we like yields. We like really good long-term soil health building practices. And like, this is the data we're using to get to our valuation. And it's going to be based off of cash flow fundamentals. So you guys all picked fields that had good cash flows. So like that's how we got the alignment. It's not, frankly, like we are really low on certain valuations where it's all CSR2 or PI. So I don't want folks sitting here thinking like, hey, I'm going to get a great valuation. Like there's work that goes into it, and that's, good agronomy and being very thoughtful about field selection.
And Ryan, I think you said you farm with family, maybe your brother.
Yeah.
Are they like, what are you doing? This, are they, what is their reaction to this? Are they on board, or they just trust you that much?
A little bit of both, I suppose. Obviously, I don't make any decisions without full support of my family, so that was obviously done and asked. But to some extent, that this is kind of my forte of the operation, I guess. So I get a bit of a leash, I suppose. But yeah, I don't do any full decisions until they're consulted, and then take it from there.
And you said this is your forte in the operation. You mean like kind of the financial management of the operation?
Yeah.
Mm-hmm.
Yep. So my wife does the accounting, and I do kind of all the other business transactions. And my dad and I do the marketing on the farm. So everybody kind of has a foot in it, but I would say that I lean more doing that stuff.
Yeah. And Ben Gordon, I'm noticing a trend here, right? We've got a CFO for an operation here, a former CPA. We got the financial forte. So it speaks to what you mentioned earlier, which is the type of farmer that is interested in Fractal are really thinking about uh, their operation as a business and how they can grow it like a modern business. Is that an accurate statement?
Yeah, I mean, I'd say definitely the business mindset, but I'd also say like all three of these operations, like the agronomy is also paramount and like where that fits. And what I've noticed is like our folks really are thinking about the future. And if you're thinking about the future in ag, like you got to either have a niche or you're going to scale, and that requires capital, but it also requires a team. And every one of these operations thinks very, very forward thinking and today about how to manage a team, manage workload, like they specialize, but all kind of like make good decisions and have that framework. And so again, like we're just one part of a much, much broader puzzle for what a damn good farm is going to look like that's going to be around 5, 10, 15, 20, 50 years from now. But like getting that snowball rolling is really, really important. And that's what I love about working with folks like these guys. And like we all usually a little bit more spicy, giving each other a heck of a lot harder time and like where we all need to improve. I'm surprised Rich hasn't asked why the cost of capital hasn't dropped yet on this call. But like those pushes are also really important. It's not just like all feel good. It's like where can we all continue to improve together? Because like we're competing and that's what we're all trying to do.
Yeah, everybody's playing pretty nice on the webinar, the live webinar here, huh?
I'm not used to it.
Go ahead, Rich.
Yeah,
Here's your opportunity.
to your I'll just go in a little different direction. Obviously, like growth doesn't make sense if your margin's not there, if you don't have a team to grow, and that's something that they pick up on too. So I mean, that back to Ben's point, is not for everybody.
Absolutely. We do have another audience question here. Is there a soil productivity index range that fits best the Fractal relationship investment?
Yeah, for Rob, I wouldn't say there's like a specific range. It's essentially just yields. And if you compare your yields in the area, like that's what we're going to do. We're going to use USDA benchmarks. We're going to talk to local agronomists. We're going to we're going to tear every data source we can on the local area, and we're going to compare where that fits. And then we're going to look at a bunch of other data sources. And we're going to just benchmark that across to triangulate. And so yeah, I'd just say like relative yield performance. And we understand in some areas you can have like really bifurcated fields, really strong fields and really, really, I mean, like Ryan, your neck of the woods, right? You got stuff that can compete with Ben and Iowa, and you got stuff that probably looks more like Rich, all, separated by 2 miles. And so like, that's part of the reason we talk about yields is that, I'm sitting on a coast right now. And even though I'm from North Dakota and they're all going to give me crap about that dynamic, have no idea about that local market. So we need to get the farmer data, and that transparency is what lets us be good fundamental investors. So again, it's selfish for the investor. We're not doing this for charity on where it fits, but like it's that alignment of interest that allows us all to kind of solve this together to try to bring capital to the farm.
Well, if there's one takeaway, there's probably multiple takeaways from today, but one certainly is the importance of a relationship here. This isn't just a transaction, it is a relationship, and it's important to kind of get yourself prepared and have that relationship prepared for when you do need it, for when the opportunities do come along. So we'll throw up, before we close out, I want to give every panelist here another chance to either add or emphasize before we end the webinar. But before we do have a poll question here. If you're interested in connecting or you want to follow up from Fractal at all, please just go ahead and fill out. It's just a yes or no if you want contact or not. Hopefully this is valuable either way, but would encourage you to click yes there and talk to the Fractal people to see if this might be a fit for you. Like Ben Gordon talked about earlier, there is this pre-approval. So there's a no obligation aspect to just kind of getting started with that relationship. But back to these panelists here. I want to just get one more thought, at least one more thought from each of you before we close out. What takeaways do you hope people get from this, and anything else you want to add or emphasize before our time is up? And I think I've picked on Ben and Rich to start first. So Ryan, you're up.
Yeah, my biggest takeaway, I think, from today's Zoom is that the beginning poll question, I guess you could cop out with all of the above, which is absolutely true in our case too. But my favorite answer is probably scaling operations with growth, because I think that answer hits all three of our bullet points of why we're doing this. We want to repair old debt, if you will, the growth of the past, and kind of like retroactively using it. We want to use it for new projects, new investments, upgrades, and we want to use it for the future. So I think my biggest thing to emphasize is it's not a one size fits all approach. Go into it with an open mind.
Absolutely. And Rich, why don't you go next?
Yeah, so I think Fractal helps us with goal alignment for growth, cash flow. They reward good yields, good management, and they also allow us to use soil practices for discounts that we're already doing, unlike the carbon market that looks to only additional practices.
And Ben Blair.
Yeah, I mean, I can piggyback on what they said, but also I would go back to how we started kind of with that relationship piece. And Ben said we're being awfully nice to him, but it's because we've had years or months at least of beating him up behind closed doors. But seriously, I mean, start that relationship. Ben's got a really, really good team. Just challenge him, go try to learn stuff, see how it works. It may or may not work for your operation. But yeah, reach out to these guys, make them work.
All right. And Ben Gordon, I'm going to throw you a curveball just in case you already have your thoughts collected. We are in this down cycle, downturn, whatever you want to call it, tough economic environment. Out of these often come consolidation. And consolidation, is good for some and not so great for others. How does Fractal kind of factor into that environment?
Yeah, I guess I'm a big believer that like my emotions really aren't going to dictate the external environment around me. So like what I want to happen, and so I need to be prepared. And when it comes to something that I value deeply, which is the family farm and American agriculture, like I want to have farmer-owned land because farmers then can have more control, and I think that's really important for rural communities, for the environment, and I think it's a damn good financial bet. So when I think about consolidation, I think things are going to happen. There's a lot of trends that are towards it. It's going to vary by geography. And what I care most about is getting that snowball rolling in the right direction for good financially sustainable businesses managed, that come out of these family farms to succeed. And so it's everything these guys have talked about. Capital is probably the single biggest input we haven't thought about at the level of other similar industries. And it's really freaking hard. I fundraise every day. I get told no all the time. Like it is not like adding that extra job to the farm. CEO, CFO is like a big ask given everything that they already have. And so whether a farmer is going to engage with us, like think about your capital strategy going forward, whether it's with Fractal, hopefully we earn that right. But like farmers who want to be around, you want to give your kids that opportunity, you want your business partners, your team, like you need to have a capital strategy. And I used to be really passive because I don't sit in the shoes that these guys and farmers do. And I didn't want to probably be out over my skis a little bit too far. But now I'd say, like, if you're not thinking about that, your farm will not be around in 10 to 20 years, or you're essentially harvesting equity to live a lifestyle, which is a fine choice, but like that is not a sustainable future for that farm. And so I think we've kind of gotten to the point where we're all a little bit more blunt, especially in that down cycle environment, because this is also the time for opportunity as long as you're also disciplined. And so it's, there's a lot of complexity there. Go find good partners, have those tough conversations. But to what Ryan said, also have that open mind because that's where the real growth is going to come from.
Well said. Thank you all. I mean, this has been great. I feel like it really flowed nicely, but it was a very candid conversation about Fractal. Last chance, if you want to have anyone from Fractal reach out to you, click on the poll there. I guess it's not your last chance because you can reach out to Fractal anytime via the website. And I'm sure they would love to have a conversation with you and maybe start the relationship just like these three guys have. Really enjoyed the time here this morning. We're ending it right on time, which is a feat all in and of itself. And we will follow up. I know this is being recorded, so if you missed any of it, we'll follow up with recording in an email. But Ben Blair, Rich Bronick, Ryan Drost, thank you very much for doing this. Ben Gordon, always a pleasure. I really appreciate your guys' sharing openly here this morning. And with that, we'll end the webinar. Thank you, everybody. Have a great day.